You've been watching decentralized finance for a while now. Seen some people make a fortune, others lose everything. You want to get involved now, but the complexity is insane. The risk, unbearable. Let's face it, you have no time to specialize in decentralized apps, and no money to lose either. Well, there is an easy way to earn returns from DeFi. A solution with no trading involved, no hassle. A place where you're always in control. Just deposit funds and watch your savings grow. We're talking about an app. We're talking about the Yield app. DeFi banking in your pocket.
Hello, everyone, and welcome to another exclusive Yield app webinar. This is going to be the first in a three-part series with Yield Labs, whose founder, Kevin Bradford, is with us here today. Say hello, Kevin.
Hi, Rebecca. Thank you. Hello to all the audience. And it's really fun to kind of be able to bring you something today. So maybe change a bit of perspective and really nice to kind of engage with your audience. So thank you very much.
It's a pleasure. We're really excited to have you. Obviously, in our previous webinars, we've had a lot of technical analysis and we've listened to your feedback, and you want to hear more about how to build a portfolio, the actual practical stuff about how you invest in cryptocurrency, how you choose an equity, how you choose a risky asset, how you build this all together, do passive income. And this is something that Kevin talks about a lot over at Yield Labs. I'm sure many of you are familiar with Yield Labs. So we're going to kick it off with a kind of presentation today, but we're going to keep it quite fluid and casual. So if you guys do have questions, please do feel free just to pop them in the stream, in the question box, and we will address them throughout the session. And then we'll have probably a longer Q&A at the end. Does that sound all right to you, Kevin?
That sounds perfect. Let's do it. Let's try and maximum value for the audience. Let's try and change your perspective a little bit, and let's try and do something a little bit different. So yeah, this is three-part, obviously. So we'll introduce today like some of this mythology, and then we can kind of build on it, and hopefully we can engage the audience and get some questions out. So it'd be good. Yeah, excited.
Fantastic. I'm really excited. Like truly, I really am. I can't wait to see what you've got for us. So I'm going to get my face out of the screen and I'm going to leave it to you. So if you need to share your screen, as I said, just let me know, and we can make that happen. And I guess we'll kind of just get into it. So I'll disappear, and Kevin, the floor is yours.
Thank you very much, Rebecca. So let me know when you can see the screen. I'm sharing that now. Let me know when that's up.
Yep, we've got you in there now.
Yeah, there we go. Yeah, cool. So the title of this is kind of something I've been kind of thinking about for the last probably 6-8 months now, and kind of attacking the crypto space a different way, from a different perspective and a different mindset, really. So I'm excited to kind of share this with the audience today, and hopefully, I know that it's kind of a different mythology and obvious to some people, but far less obvious to the others, and kind of this really helped me in my crypto journey, and I've been pretty successful in terms of the output and the way I've been able to live my life ever since. So yeah, the title of the presentation is basically businesses work for you so you don't have to work. So let's jump straight into the agenda. Obviously, I'm going to make some introductions into kind of myself and what we're trying to achieve here and what we do at Yield Labs. Then we're going to look at kind of the opportunity of crypto as a whole, and obviously that's fairly obvious to the majority, but we want to try and attract new participants to the space as well. So kind of just set the scene, and then looking at a portfolio, and basically in this session, kind of perspective, and maybe there's a different way to kind of attack this crypto space. And then we'll kind of move on into some a worked example, a very basic one, but tie the whole presentation together. And then we'll, as Rebecca says, we're welcome to take any questions and answers and kind of thoughts, and obviously take this information away and think about it, and kind of the idea is that you execute yourself, not we or me or Rebecca or anybody tells you what to do, or we're not offering financial advice, but kind of being able to be self-sufficient in this space, use the tools available, Yield app as an example, and yeah, you can be successful out here. So just a little bit about myself. I'm just pretty much a regular guy from blue collar background. Nothing special, no crazy finance degrees. So I'm trying to be relatable in this space in terms of where I've come from and where I've got to. I worked in the automotive industry in the beginning, just kind of fell into it out of school because I had no direction and very little qualifications, not because of kind of my I wasn't, not that I wasn't smart enough. I basically just didn't really know what I wanted to do and just floated around like a lot of people do. And then I ended up in the military. Obviously, that gave me quite a lot of direction because that's firm and fast. I was in the Royal Signals. I worked as a communications technician, and then I got out of the army after tours of Afghanistan and all of the usual stuff. And I worked in the satellite communications industry for oil and gas companies and providing government networks all over the world, and especially in the Middle East and North Africa, where I managed to work my way through just by experience, all the way to kind of country management and operational management of regions. And I had a very, it was a very comfortable career. But I found kind of crypto, 2017, I think it was, I found crypto and the yield category and the promise of yield. And then I basically studied and exited end of 2019. I kind of just walked away from my career. Crypto hadn't gone into the bull cycle yet, but I kind of knew things were inevitable, and I made that leap early, studied and studied, and find myself now in crypto, financially free, basically able to kind of provide this education for free to a lot of people because we are really doing well at what we do, and just try and drag as many people with us and show them these tools and techniques. So I worked I've been in the crypto space as a speaker for a while now, and provided education. I helped build the Celsius community back in the day. I've been around from the yield category since the early white papers before the DeFi. So I guess we became the experts just by default by being there at the beginning before there was any yield generation on digital assets. And then late this year, we've kind of a group of us have kind of formalized our kind of work and our efforts into the Yield Labs project. And Yield Labs is not affiliated with Yield App in any way, and we're very unbiased, and we basically work with businesses to help them build out infrastructure in terms of yields generating products. We work as advisors. We help high net worth clients yield on their assets, or if they have a significant cash position, we help them, enter the space and yield on that too. And we're building an amazing community as well. So everything that we do is kind of take from the bigger fish and give back to the smaller fish. And we don't monetize it, for personal gain, because we just believe this platform's worth building, and we believe there's a lot of value in terms of what we can bring to our audience, and kind of when you build that success, usually good things follow. So, and it's proven to be true. So we do have our own community. Just to touch on it, because you're all welcome to come and join. We've built a community. We always act in the best interest of our community. We're delivering unbiased content on yield generation and kind of wealth, to facilitate wealth generation, and it's an all-inclusive format with no kind of, we're not tied to any one project. We're not paid by any one project, and we only work with projects that we see fit to use ourselves. And we've done the due diligence and stuff. So knocking down kind of the barriers in crypto of this tribal silo-based ecosystems where communities are claimed to be there, but they're not really there because all people are interested in is just pumping a token. And then as soon as the token pumps, the community just disappears. So we're really trying to build something solid and build personal relationships and the connections with people. So we do lots of different types of content on YouTube, Zoom meetings, and we interview founders and of projects, both DeFi and CeFi. And we have various social media channels. You can check all these out. And there's tons of information there for you. So we believe this is the best in class kind of offering in terms of, first of all, the quality of what we're trying to do, where a lot of us have had a corporate career at some stage or another. So there is an element of professionalism in kind of what we try and do, and not just shooting off the hip. and we're not just trying to achieve maximum gains all the time and promise things that can't be delivered. And most of our analysis is backed up by data. So, and also what we want to find is all those people in the audience. Some of you probably watching this now. Who are you? Kind of bring you to the front. You're welcome to come and join in our community. And if you add value to the community, you're welcome to showcase kind of what you're doing, how you see things, and just join in. And it's an open platform. Anybody is welcome. So anybody that wants to kind of bring something to the table, we have a great platform to speak on. So yeah, and the final thing we're trying to do is basically drive the industry to a higher standard in terms of practices and promises, and we have been around probably longer than a lot of the companies that are trying to build both the companies and projects. So we really think we are the kind of experts from the external perspective. We don't claim to be technology experts or coders, but we really see the category holistically, and we've kind of seen a lot of the mistakes in the past. So we're trying to make sure that we kind of guide companies into the right behavior, basically to deliver all of you guys watching this now, guys and girls, basically the best service possible. While we're reasonable, the companies need to make money, but they also need to deliver on their promises. So everything that we do, if we take paid work, we give that back to our community in terms of hiring more people and just delivering more. We're always just trying to do more for our community because we really think that's where the value is, and in terms of true community rather than just kind of claimed community. So that's you can find us on these channels. Obviously, social media. Reach out to the social media leads. They're very engaging. We have a Telegram channel, which is highly amazing participants in that channel, and it's such a great network of people that just really want to do better and look at the category, the crypto and the yield category in a holistic way rather than one thing. We have a website as well, and there's lots of services on there. We offer consultation services, all sorts of stuff. So that's enough on Yield Labs and kind of what we do. So let's jump into this presentation. And I think the idea of this presentation and why I've kind of put it together is just to give you a different perspective on kind of how to approach this space, and and basically, yeah, there's other ways to do things, and portfolios are definitely changing, and kind of offerings and opportunities are changing. So let's jump straight into kind of what is the opportunity at hand. And I think it's clear to probably most of you and the new viewers probably worked it out already that this is one of the most exciting times in financial history in terms of we have a legacy outdated system, and which is just collapsing in many respects in terms of like who's running it and their practices right in front of us. And things have to change, and I think everybody here that's even engaged in this call, you're well ahead of the curve, and it's a huge chance to try to change your lives and basically, yeah, look at finances different and then profit that way. So yeah, there's highly lucrative yields and tools and techniques on offer. At the same time as asymmetrically appreciating underlying assets, which hasn't happened, I don't think, before, having those two opportunities together in such a frictionless way. And like I said, with that growth of Bitcoin just on its own at 200% a year annualized over the last 12 years, that's an amazing opportunity. The ability to basically conduct business and run your own business effectively, your own portfolio in this environment, just seamlessly with a few clicks, and sometimes KYC, sometimes not, but even KYC processes are seamless these days. And to be able to conduct finances in this way and send large volumes of money backwards and forwards in a trackable and traceable way is an amazing feature to be able to take advantage of. So, and then I think coupled with the ability to kind of run businesses off just a laptop, we don't have to look at legacy operational costs and infrastructure that's typically needed to run a business, is just super attractive. And basically, I've come from pretty much nowhere to get where I am, and it is literally possible for anybody with enough hard work. And then obviously, just an amazing amount of capital just flowing into this industry, and amazing amount of interest. And I think it's just almost inevitable that we just ignore the short-term dips and look at the bigger picture, that where this space is the place to be. for the foreseeable, for the up and coming years. So with all that in mind, that's a great opportunity. A lot of you already knew that. It's kind of how are we going to attack this space, and what are we going to do, and how are we going to first of all set ourselves up to kind of operate here and be profitable and be able to sleep at night at the same time. So most people just come into crypto, they see the gains, they see the madness, and they want a piece of it, and they're just looking to buy an asset and just sell it at another price, take the difference, and buy a Lambo or do whatever they want to do, buy a house, go on holiday. And I think now, and that was a very 2017 mentality, because that was basically all you could do with these assets. Whereas now we have many, many options, and portfolios are definitely evolving into almost small businesses where we can look at things in a different way. So when we really look at like the portfolio and what it consists of, if we break it down, it's basically assets, which are cryptocurrency or digital assets, however you want to look at it. We're able to take liabilities in terms of debt positions. We have kind of a physical location, which is an entity. We're able to buy equity in some of these amazing companies, and we're able to generate revenue at the same time of our assets. So just that in mind, rather than just looking at a blockfolio portfolio on your phone or whatever it is, whatever app you're tracking your assets in, what is in that portfolio is effectively a business. So if we acknowledge that, and then we kind of take the second step, it's kind of like how do we view what is our perspective on kind of the value of that business? Are we going to like look at it in terms of just raw dollar value? Are we going to measure it in Bitcoin value or token denomination? Or are we going to look at it in there's many ways to kind of express, and this session isn't about telling you which way to express, but it's about trying to think about how do you view that portfolio, and not just looking at the top line, and maybe looking at kind of what the weekly and monthly payments are, and kind of long-term growth instead. So obviously the perspective needs to be coupled with the crypto landscape at the time, what's happening, regulations, etc., and then obviously the macro picture as well financially. So it's a lot to people need to kind of do the work to understand, have a perspective and approach, and basically shape your business around that, and express how you're going to kind of operate in this environment. So in terms of mindset, long term is the only way to kind of beat these markets or win is time in the market. You can trade and you can profit short term, but nobody's going to outperform the long term growth of these assets. And making sure that you kind of understand that and you're choosing quality platforms and assets is key. Obviously managing risk while we do that, in terms of position size and kind of platform choice, and however basically you want to express that, but kind of risk management at all times is extremely important. And I think also building the highest quality balance sheet. So if we're going to look at our portfolio as a business, we want to choose the highest quality stock for our shelves. We don't want stock that's going to stay on there for a while. We want to make sure that there's high demand for it, and it has unique properties that we want to sell to our customers, or keep yourself. And then basically the final thing is just not trying to achieve maximum gains from this space. I think it's very easy to get suckered into how much can I what's the maximum I can make at any given time, rather than kind of looking at things over a longer period. So if we can keep all of these things in our mind and operate in this way, just as you would operate any other business, you have a very good chance of kind of out competing the competition. So let's just break down the portfolio, or let's acknowledge that based on what we've just said, that the portfolio is a balance sheet. So a business balance sheet. So like we said, on the balance sheet, you have some assets. So there's different types of assets. And these are kind of my own categories that I've kind of made up. So stable assets, i.e. stable coins, value storage, Bitcoin, speculative assets, and infrastructure as well. So we're gonna cover those in a little bit more. Each of those assets kind of has its own monetary policy or kind of properties and unique features, and some of these assets are collateralizable as well, so you can basically borrow against, just like you can borrow against any other asset in the real world, stocks or houses. If you're rich enough to borrow on stocks, then yeah, that's a feature that we definitely need to, and a property we definitely need to keep in mind. So in terms of liabilities, we can, as I said, we can collateralize our assets now and create debt positions and leverage if we understand and it's appropriate to do so. And then we can generate a revenue stream on these assets for our balance sheet, basically via platforms like Yield app. There's other competition, DeFi, CeFi. A hybrid approach would probably be my it's not a one or done solution. And kind of there's also many other ways to create, just as kind of Yield app is creating is creating a revenue for itself to give back to its customers. There's other ways we can do it as well. So liquidity provision is huge, and via Uniswap, market makers, capturing transaction fees of different platforms, or even staking. So there's many ways, and it's a whole topic in itself. And then obviously the balance sheet has a geographical location. We have to factor in taxes, where you live, what the rules, how to operate. So yeah, basically all of those categories equal kind of business structure and balance sheet structure, and then and they're all to be considered personally for your own venture. So if we kind of look at the stable assets, if we just cover quickly the properties on kind of those four categories, just to break it down a little bit more, and we really dive into kind of, stable coins are definitely something that are kind of laughed at. I find a lot in crypto, in terms of that there's a lot more exciting or max gains to be achieved elsewhere. But when we really look at stable coins and kind of the functionality and what we can do with them these days, they're actually some of the best assets in crypto. And obviously they provide a huge ability to kind of react if you have stable coins on your balance sheet to kind of whatever's going on, high, low, side, whatever markets, and a very high yield off them as well. Obviously, they are subject to debasement, so we need to make sure that yield outstrips debasement, and it's not having 100% stablecoin portfolio. But but we can also do advanced techniques, i.e., producing speculative assets with our stable assets. So we can basically set up a portfolio where we have an allocation of portfolios, which is basically creating a risk position for us without taking any risk. So when we start to look at risk management this way, it becomes very attractive and almost a no-brainer a lot of the time to not take maximum risk and to actually be generating risk at the same time. So you can win both sides if you really know what you want to do. You can collateralize stable coins. People don't understand this and why you'd want to do that, but that's another topic for tax benefits in certain regions. They're obviously interchangeable. There's algorithmic stable coins, all different types of offerings, regulated, non-regulated now, and each has its pros and cons. So we can hold a basket, and some of these stable coins are actually a basket behind them as well. So it's a fascinating topic. But and for new market participants who kind of are entering crypto, I think achieving something like a 20% yield on stable coins, you can do a lot better. But just achieving a 10 to 20% yield without losing any money, that's an amazing start, and that's certainly a lot better than what you were getting in the bank or wherever you were before. So it's always important for us to enter the space and not lose any money, and just even if we're making a small amount of money first. So stable assets are a vital part of any portfolio. So kind of move on to the next topic. So value storage, and this is subjective. We can add different assets to this. This isn't me telling you this is how it should be. It's kind of me giving a structure of kind of how we should think about the space. So Bitcoin and Ethereum are kind of arguably the leaders in terms of value storage and kind of long-term upside. Obviously, you can collateralize these assets in many ways. We can yield off of these assets. If we look at kind of what Yield app offers at the moment, 16.5% on Ethereum is just an amazing proposition in terms of, that's just a crazy yield on a very high quality, and probably almost destined now. It's not financial advice to kind of appreciate over time, as long as we continue to see the adoption curve continue. Look, when we have these assets, just because it's the highest quality asset in terms of a crypto asset, doesn't mean it has to be the largest percentage of the portfolio. It's probably the opposite, because we kind of know where the trajectory is. They do carry opportunity costs because there is other opportunity elsewhere that can outstrip this, and they do carry a volatility risk as well. So as I said before, how are you valuing your portfolio? If you're measuring it in ETH over dollars, then accumulating ETH, the token count of ETH, more coin, more token, rather than looking just raw at the dollar value of ETH. Maybe a perspective you wanna follow. So like as we mentioned with staking and stuff, 32 ETH has its own potential in ETH2 to basically be its own revenue stream or business in its own. So it might be a meaningful proposition and something that people want to follow. And then finally, kind of unlocking capital in these assets without actually having to sell the asset is an amazing proposition as well. Collateralizing, I know Yield app doesn't offer this service at the moment, but I'm sure within the probably next 12 months that they will be working on some sort of loan feature. There is other loan features. There's automated loan features in DeFi as well, and Aave and different things. So being able to utilize these assets just as you would with property and basically remortgage, loan out, revenue generation is an amazing potential, all seamlessly with just a mouse and a keyboard and a screen is amazing. So in terms of infrastructure, there's some examples on the side, and I think let's focus on YLD because we're on this platform. So I kind of class holding a basket of or allocation of YLD as basically an infrastructure. So from my business, from my perspective, it allows me to access those higher yields. I don't look at the value of the YLD token. It's very, it's allowing me to basically make more revenue for a reasonable cost in comparison to kind of my portfolio and the size. So if we look at it like a bakery or a pizza shop analogy, the YLD is effectively like an oven or a piece of infrastructure that will basically print out additional items that I can sell in the market, that I can keep, I can give to my customers or whatever it is. So if we start looking at these tokens as not just virtual tokens, as actual infrastructure on our balance sheets, they become extremely powerful, and then we can basically park them there for the long term and then make sure we access those utility features that are on offer. So YLD is one that I hold, and it's definitely it's sort of lucrative to be able to access all of that other stuff. So we can collateralize these. They help us produce other assets, as we said. They have extreme volatility, but does that really matter? So, for example, if we had a bakery business or something like that producing loaves of bread, and we're in an area where the business was volatile in terms of property value or in terms of bread oven value, we're not going to just sell our business if all the customers are buying the bread. So sometimes we just have to look, does it actually matter what the price of that asset is if it's allowing me to get this? Because we know over time more people are going to come and it's going to go up. It's just kind of maths, and it's baked into the price. Yeah, and then that strengthens the balance sheet value long term. So, and it enables you some of these assets to basically get a risk on position, or what I call a speculative asset position, via stable coins. If you look at what Yield app again, what it basically does is you can use stable coins, and then you get an allocation and paid out in YLD and an allocation paid out in the native token. So you're basically effectively minting or for free using your stable coins a strong position in YLD, and then you have to track the underlying fundamentals of the Yield app platform to make sure that they're heading in the right way, and if that's an investment you want to hold. So that ability just to mint these risk on positions is I don't think it's fully understood from a lot of people, and people just rather buy the asset, but then they're subjected to the volatility, which can be very damaging and for their portfolio and their brains also. And then they get shook out of their position, they sell it, and then they leave the ecosystem and they miss out on the opportunity. So you can capture transaction revenue as well. So we look at assets like Curve and different things. I'm not telling anybody to buy this stuff. It's not financial advice, but I'm just saying, capturing transaction fees, network fees, this and that. These are kind of high quality assets we want to put on a balance sheet to basically print us out cash flows on a weekly, monthly, daily basis. So if we look at kind of speculative non-functioning assets. So I wrote this presentation quite a while ago, and I know ADA is now probably it's a functioning asset. I've seen there's some yields and different things on it, and it's developing. So they're just examples, but I'm basically saying a lot of speculative assets that people are buying, kind of looking for these massive moves. They don't have any utility value, and they carry significant opportunity cost if they don't do that ridiculous 10, 20, 100x that you're kind of looking for. So when we're looking at putting these on our balance sheet, we really have to put them on in appropriate proportion. So if we turn 1% of the balance sheet into 10%, that's a really big swing, and that could be really meaningful in terms of our net worth, and not going all in on whatever it is, whatever your favorite coin is at the moment, and trying to hit home runs, turn a 10,000 into a million. It's doable. We've all seen it done, but it's also, we have to just understand what we're doing at the time, and it's not about not having fun and not being, not having a bit of a flutter on the side left. That's all good, but as long as we don't destroy our portfolios at the same time, that's okay. So yeah, a lot of the time these don't have any functioning properties. The non-functioning assets, in terms of you can't put them to work, you can't generate any yield, you can't put them in a AMM scenario and basically capture transaction fees, you can't provide liquidity, and there's no utility features or functions behind it. You're basically waiting on a promise that something will happen. So they are, in terms of it's basically like having some items on a shop that you can't sell, but you think that one day they're going to go up in the next 5 years. You don't run a business like that. Yeah, you put those in the back, in the drawer, just in a very small proportion, and then you hope that you're right one day. So just understanding these speculative assets and comparing them to kind of the higher quality assets or safer assets, and kind of making an informed choice. So if we look at kind of combining this now, so we can take these different categories, and basically, so for example, we've already mentioned it. You can hold a balance of 20,000 YLD to unlock higher interest rates, which is an infrastructure play in my opinion, but we can also say that's a speculative play as well. So this is one or two categories, and then we can kind of deposit a stable asset to kind of maximize our weekly, monthly revenues, and kind of minimize our risk at the same time. And now we can earn a combination of these two, as revenue, and basically we're going to get appreciation. And I wrote this presentation a while ago when it was 30 cents, so it's actually come true, and we're going to show an example in a minute. But basically, you're earning YLD at a certain price, and then obviously that price of YLD kind of appreciates over time. So that's basically a combination of 3 or 4 categories all working together in one platform to basically produce revenue. So if we just take this example, it's just an arbitrary number. 50,000 USDC, we deposit at 20, I think it's 20.5 now percent on that if you hold the token balance. So 50,000 USDC with a balance of YLD tokens would basically equal, just on the base rate, it would equal around 10,000 a year. We break that down in terms of like 50-50 output, half in USDC and half in YLD. And then kind of from a monthly perspective, that's what we're kind of spitting out at the moment, just on the base rates, 833, and then we break that down twice again. So then what we're looking for is with the YLD asset, or whatever asset we're earning, is like, what is its potential, and how much is it going to earn? Are we going to hold it, or are we going to change it for something else? So I've generated a significant amount of wealth myself by earning risk on assets for free and then holding them over a longer period of time, 6, 9, 12 months, and then they appreciate. So any interest payments I'm getting are actually appreciating at a crazy rate. So you can see from, like, let's say a 30 cents price, 6 months, or 9 months time, and in crypto, these are very kind of bearish estimates, so we know things can move much faster than this. But just for example, that a $416 payment in a couple of months time can now be worth $800, $1,200, $2,000. And when you start to when you start to add these all on top of each other, you end up with, like, just on stable coins and a little bit of YLD infrastructure, you're basically spitting out like 40%. with the daily compounding as well, which is absolutely crazy when you factor that in, and then 10% on the YLD at the same time. So you can just see from this very basic just explanation that amount of money that somebody a lot of people are able to achieve this over time with saving and working hard. You can put them into these platforms and really maximize kind of the output without taking next to no risk. So this is just amazing. This is just on stable coins alone, and then obviously when we do this on ETH and different assets, once we understand the calculations and the risk on these assets, you can really basically leverage platforms like Yield App and all of the other offerings, DeFi and CeFi, to make significant amount of money. And obviously we have to factor in taxes and entity location, so always keep that in mind. So I basically wrote an article on this. You can check out my Medium, just on maximizing stable coins and kind of how I see it. This is probably 6 months old now. Basically saying that I saw the YLD asset as the risk reward was very favorable at that time. Obviously the price has moved now, but we have to look when we're accumulating these assets as interest, like where are they in their cycle, and kind of where are they in their lifespan, and kind of how does that fit in? What's the risk reward on that asset? And obviously this was a while ago, so the risk reward was very favorable, and anybody that earned at 25 cents, 30 cents YLD on their interest is worth 47, 50, 60 last week. So you basically 2x in your interest as well. So, or in terms of like tracking, and this isn't about saying buy YLD. It's just YLD is just one example of kind of an asset that you can earn interest on. There's a lot of kind of incentivized yields out in the market in different places. So if we use all the pieces of infrastructure and kind of, it's not about spreading too thin or anything like that, but it's kind of understanding what's right at the time, what is attractive and what's growing quickly. So in terms of what's growing quickly and tracking metrics and data, that's what we do at Yield Labs. We basically pull all this data together so that we can basically show you, so you don't have to do the work. Come and join our community, and yeah, you just get access to everything. We produce these reports. Yield app, they produce their own reports, and we kind of consolidate them and track them over time just to see what's happening. Are we growing? Is the price potentially going to go up based on the AUMs coming in? Is that going up? And if any of these metrics start to track down, we also, we flag it and we say, look, this isn't going where we thought it would. But we're so early in crypto that effectively, and there's such a thirst for kind of capital to be parked, it's almost impossible that they don't go up over a 6-month period. But we always need to check, and we need to make sure, and then we can obviously do calculations based on our findings, like, how much do we think it's going to go up, et cetera, and just and speculate and have debates and conversations that way. So just to summarize and pull everything together, these are assets. Ignore the assets in the sheet. They're just there for effect. It could be anything. So this is kind of the balance sheet of assets. We've got a mixture, one from each category or two from each category. And then what that gives us is a weekly, monthly, yearly payment. What we can do with a weekly, monthly, yearly payment is basically project revenue over 1, 2, 3, 4, 5, 10, 20 years. Obviously rates are going to change. We need to factor that in, but we can basically just gives us predictability on kind of where we're going to go without appreciation on the underlying asset. And then we can basically build risk profiles as well, to say, okay, I'm taking too much risk. What happens if the market cuts in half tomorrow? And this is what I do with a lot of my clients. I don't tell them what to do, but I basically make them aware of like what they're holding, in terms of like risk factor, how are they going to get to their goals, et cetera, et cetera. So we offer services to really like help clients just understand what they're doing. And you'd be surprised the amount of clients that come to me with $1, $2, $3 million, and they're just all in a risk-on structure. And just by changing the structure into a high yielding revenue stream using stable platforms, they sleep better at night, and they've already actually made it and they don't even realize they've made it. So I don't think a lot of this stuff is kind of discussed enough in crypto. In the next sessions, we'll talk about the difference between risk on and risk off portfolios and different things, and kind of how the revenue might change. And you'll be quite surprised how the revenue does change when you de-risk your portfolio a lot, and you just take a longer term approach. So as I said, none of this is financial advice. Don't take this structure. This is not a structure to take. This is an old presentation that I built for myself, and yeah, it's just to kind of visualize what you can do with your own portfolios and how you can kind of project what's going on. So I guess like final thoughts, as with any business, you need to kind of plan and execute your business as your portfolio as a business. We are operating like that out here, whether you like it or not. And just buying random coins and putting them in a wallet and just leaving them on an exchange is really a shame, because you're in an amazing space and there's a lot more you can do. You leveraging platforms like Yield App, etc. Always manage the risk and make sure your assets. Obviously, we have the opportunity to kind of self custody and do all these things. So if you're going to do this, understand how to do it properly. If you don't want to, select a platform that will do that for you. And obviously, they have to make money too, right? So it's a win-win relationship for both. So if we look at things, try and look at things over a slow and steady revenue over gains. We all came to crypto, as I said at the beginning, to kind of not have to work in the place we don't want to work anymore, where we can work somewhere where it's a bit more fun. And we can only do that if we've got a cash flow, right? So look at the revenue and try and challenge yourself to like look at your kind of what you have in that way, and rather than just top line numbers that are like, I want to get to 6 figures, 7 figures, 8 figures. What actually happens when you get to the 8 figures? If you don't have the revenue structure, then you've just got 8 figures on a piece of paper. You take it out and then you've got to start again. So try and look at things that way. Dollars always for beginners. So if you don't know what you're doing, it's very easy in this space to kind of come in and think you know what you're doing when actually you don't. So just start slowly. Don't get greedy. Start with dollars. Don't lose any money. Make sure you just deposit on a platform or whatever you want to do. And just earn 10%, 20%, 30%, whatever it is you want to get. And that's a great place to start. And then really like invest in your education, because that is kind of the power out here. The education is kind of the growth in the portfolio and also the growth in yourself. So make sure that you're really working on that while you're not losing any money. So losing money is devastating, and it psychologically can take you, that carries a massive opportunity cost as well in itself. So yeah, the portfolio is basically an expression of how you see the market. So if you're a risk-off person, you approach life in a risk-off way, and that works for you, and you're still successful, then yeah, express in that way. If you are a bit of a risk taker, but you understand risk, you're a bit of a technology brain, you see things other people do, you can structure different ways. It's not about saying one way is right or another. That's up for people to make their own choices, but express your personality and kind of the way that you view life and your values kind of in your portfolio, and you'll probably be true to yourself. You'll probably find that you actually do really well just off that strategy. So yeah, for just final words from myself, this is the biggest opportunity of my lifetime. Definitely, I've been looking for a long time, and I've been in crypto for a while now. In terms of, I've always been an entrepreneurial mindset, kind of looking for things, but this is absolutely insane what is going on out here. And even if you just come here, deposit in Yield App, earn some YLD, and it appreciates, and you do nothing more, you've done something amazing. So, and buy a little bit of wherever else you want, and just hold it for the long term. So you only get one chance to really do this right at the right time. The market is very fast and dynamic, and there is going to be massive swings up and downside. So make sure you try and do this properly, not wasting the opportunities by just gambling and just wasting this amazing thing that we've been given, which is the crypto space and the potential for financial freedom. So if you configure the balance sheet to basically suit like your expression, as I mentioned before, and your kind of personality, and then you kind of understand the macro view, you're probably going to do pretty well out here. So I'm not a genius. Everybody isn't. Nobody is. If even these tech geeks, the ones that are building all this infrastructure, they're lacking the skills to look at things a different way too, because they get stuck too in the details. So everybody's got a chance, and just try and earn some money and stay safe and enjoy yourself while you're out here. So you can basically find me on all of these outlets. I've got my own website, but a lot of the stuff I do for Yield Labs, you can contact me there. So I've got email address, Medium, and also I'm on Twitter. I've got the address is there, so you can basically come and find me and I get a lot of DMs and a lot of stuff. So if I don't reply, apologies. Just come into our community on Telegram, join, say hello, and there's lots of helpful people in there, and we're doing plenty more sessions like this where we can really try and help you. So we really want to hear people's stories, and you can come on our channel. We'll interview you if you want, and so you can kind of show yourself to the community, and you'll be surprised what happens when you do that. A lot of good comes from it. So I guess that's it, Rebecca, for the first session. I hope that was kind of helpful, and kind of people, some people will kind of reject that and say, I just want to, make max gains and take a bit more. Some people will be like, oh, wow, I don't actually have to do that. So it's kind of something different we're trying to bring today. So I guess any questions and comments on kind of that deck?
Yeah. Well, do you know what? I think that that's such a really good point, and I think that's something that really came through, which is that it doesn't actually have to be either or. People do look at cryptocurrency and they think, oh, well, yeah, let's go in, let's make 100 times, 10 times. And if you're doing certain stuff down in the altcoin market, then perhaps that is what you're looking for. But if you are trying to create something a little bit longer term, then you do kind of need to take this portfolio approach. I mean, the one question that I definitely have is for somebody who's just, is this something for someone who's already made their 6 figures, or is this an approach you can take from the start?
So I think starting this way is a great way to start, but obviously you're not going to make tens of millions of pounds if you kind of just keep it in a completely risk-off structure, right? So what that, and also some people don't want to do this structure now. I get that a lot. They're like, but Kev, I don't want to do this. I'm like, fine, just learn it, and then when you make your 8 figures or whatever you want to make, then come back and do this. So it's about kind of education, not kind of closing your eyes to kind of different structures and different stuff. Basically when I saw this, I basically all kind of thought about it this way. It just helped me kind of mentally click and think, okay, like when I get to that place, or basically it's not, like you said, it's not binary, so we can phase into that over time. So we want to get to this amount of revenue per month, whatever it is, $1,000, and that's a week, and that's amazing to me. We can phase into it, so we're basically reducing our risk as we go into it. So it's not all do this or do that. It's just kind of like understanding the principles, and then you can apply it anyway, whenever the time's right for you, whatever that means.
Right. And I'm just wondering if you are somebody that doesn't have a huge amount of experience, I'm just kind of thinking off the top of my head here, like taking that kind of structured approach where you're looking at your infrastructure assets, your value storage, your stables, it's not a terrible way to even begin, because it might actually be a structure in which that you're able to look at a market that otherwise seems insane to you and somehow kind of, categorize it. Do you think it would work on that level?
Yeah, I think it's like, I think a lot of people don't even like understand what they hold in the first place. This is what I'm trying to do. It's not about like just basically identify, like really go through your portfolio and really like, what is it I've got? Why have I got that? Like, what's the story I've got that? Most of the story, most people's stories is kind of because it's going to go up. That's not really a story. I did really well, and but if I show people like how it took me, how long that took me, and the amount of swings I had to go through to get to that, the only reason I got there is because of the story. Like, because I knew the story was good. I knew this yield on digital assets was like, had potential. I never thought it would be this big. Like, if I did, I would have just gone all in on it. So I really risk managed my position at the start, but then I realized later on, because I had a story, oh wow, this is bigger than I ever expected. And then I went like chasing it more, because I was like, wow, like I slept a bit down there. I should have done a little bit more, but I'd already had the story. So I was like, the story was already set for me. So when I see things now, if I try and like really like, yeah, why am I holding this? Like, okay, it just chopped in half 50%. Does that mean I sell it? Or does that mean like, oh wow, I can actually earn more of that now because it's cheaper and different things. So if you've got that story, you're really going to be able to kind of hold through the volatility, make it to the place that you want to make it to, and then you can switch the structure. Okay, I don't need to take that volatility risk. I don't like it anymore. My portfolio is swinging around 5 figures a day. I don't want that anymore. I want it like predictable. So I'll take 20% of that away, put it there. Okay, it's stabled up a bit now. Now it only drops 4 figures a day or whatever it is, like everyone's different. So yeah, it's not a one or done. And it's different for everyone. Some people have families, some people live with tax structures, some people don't care and they want to gamble. Like everybody is different. Everybody's got their own goals.
Well, that's the thing, isn't it? And you've got to kind of assess how much time you have, your kind of financial goals. Are you starting out? Are you trying to actually have an income stream from your portfolio? Are you starting from scratch? These are all things that, are a consideration, but definitely like having a structure around it, a process, it helps for me anyway. It makes me feel a bit more sane about how I might kind of approach this kind of stuff, I mean, we
Yeah,
do
that's
have a
it.
couple of questions that have come in. So I mean,
Sure.
somebody actually commented when you were talking about, the differences between different kind of yielding tokens. Somebody very kindly did say that that's what they do like about YLD because they don't have to monitor it quite as much as Celsius's tokens. So thank you very much for that comment. And then we had another question as well about regulation. So this comes from Eddie F. And he says, what's your opinion of regulators targeting DeFi, perhaps in order to protect the incumbent banking institutions who are struggling to compete with crypto yields? I mean, I'd say that it's not even competing. So, I mean, what do you think there, especially when we look at this week with, the SEC now trying to put Coinbase out of
Yeah,
business
yeah.
because they're terrified?
Look, it's like that. It's valid, right? So this is again, you have to select your platforms wisely. There is periods with platforms where they are immune because they're so small, but they have great teams or great potential and great momentum. So you get windows where I think you're like, to be honest, I think your company's in that window now where you're growing quickly, but you're not that big. So you're kind of off the radar, but you're going to be on the radar one day. So that for me is an attractive proposition because I understand your business inside out. I know your team. I know everything that's going on in there pretty much from within reason. Obviously, I don't work there, but I'm comfortable with the practices and the people involved. And I'm comfortable that you're not going to get slapped on the head with a hammer yet, but you will do one day if you get to $10 billion, right? So that's a sweet spot for me. So I'm just going to take advantage of that. And then when we get close to that point, like, okay, let's see what happened to the other companies. Okay, that one go. So it's like not a one or done. So how are they going to regulate? Who are they going to regulate first? The big ones are going to get hit first. So being a first mover, you get security advantage, track record, but you also get that kind of regulatory hammer. So how did they act in the last 3-4 years? Did they build out a legal team? Did they spend $50 million on legal, or did they put it in their pockets? And kind of that's why I'm kind of qualified to say this stuff, because I kind of watch them do what they're doing. All of them, you mentioned Celsius and all of these people. So there's it's not a one or done, and no one's destined to go to the promised land. But I think some people are going to get there. And DeFi, how are they going to regulate a lot of this stuff? I think they're very, this is where the regulators are going to pull their hair out, but can't regulate everything. A lot of these are enormous. People are just going to run away, close their innovation companies that are funding these things, and just disappear into the background. So it can't all be regulated. It's going to be regulated. And as long as people like your company are kind of helping the regulators need help, don't they, to kind of build the regulations. So I'm sure they come to Tim or Alex or whoever it is, and well, I know they go to Alex. He's told me, and yeah, they come and they're trying to help shape the regulations in some of these areas. So we just have to watch it. We have to pay attention. But being scared that it's all going to get washed away one day, I think is, the internet they tried to regulate that out as existence at the start as well. So I don't think the regulators are all that bad. I think that a lot of the time they are. You've got to remember they're trying to protect customers, right? So they're not going to damage market participants. They're actually trying to protect them. So maybe it causes a bit of chop and stuff, but they're not wanting anyone to lose money. That's the opposite of what they want to do. So just have to wait and see, basically.
Right. And regulators tend to be more reactionary than kind of proactive. But,
Yeah.
there's a lot of work going on in the industry to, as you say, to kind of help regulators get to a more constructive place. And fingers crossed, we'll get there. And we are definitely, as you say, working as closely as we can. And we're always seeking any piece of kind of regulation or licensing that we can achieve to make sure that we're future proofing, because, that is very important in this industry.
Yeah.
We have another question, in fact, speaking about the future. So will the current DeFi landscape change much in the coming year as a result of these kind of regulatory changes, or perhaps in general? I mean, is there anything that you see coming up that could affect portfolio construction over the next year?
I don't know. It's just kind of just keeping up with the pace of what's coming out is one thing. I think, the centralized offerings, there isn't many that I would even engage with. So how they engage with the regulators back is TBC, and I think it's uncharted territory, right? There's nobody's done this before, so will things change? Probably. Will new things continue to come out on a weekly basis? Absolutely. Bull or bear market? It's just we're in a different environment now where we go in a bear cycle, everyone just floods to your platform and the AUM goes up, right? So in a different denomination. So we're not this nobody knows what's going to happen, and I guess we just have to pay attention, join communities like ours, and join your Telegram and all these other Telegrams, and just ask the questions, because we all need to club together, because if we're not going to club together, we're not going to be able to work all this stuff out. So um, I don't have I don't have the answers, and you have more answers than me, Rebecca. But we'll do that another session.
What's going to happen over the next year? It's just everything's just going to get bigger and better, faster than ever, all of that stuff.
Yeah.
I'm sure. I mean, it's so interesting for me personally, coming from a traditional finance background. I mean, for those of you that don't know, I was a financial journalist out there in the traditional world for kind of 10 years, and writing about traditional markets, and the rules of the game there are very, I mean, they're similar, but the time frames are completely different. So 3 months in crypto is a lifetime, 3 months in traditional markets is a brief holiday. So seeing how these kind of new dynamics shape up is the most interesting thing, because you're even starting to see some tracking from traditional markets as well, thanks to kind of the huge amounts of quantitative easing and money that's going into the system, and that is kind of changing cycles. So I mean, I think the question is even larger than what will happen in DeFi or even cryptocurrency over the next year, but what will happen in financial markets over the next year, because everything's just being completely reshaped as a result of what the central banks are doing.
Yeah, I think it's just like for participants, it's just like seize opportunity and don't be afraid, and just manage your risk, and make sure you don't just put your life savings in one platform. If there's an insurance option, maybe consider it. Like, just get involved, or even like do nothing and just research the crap out of what's going on, because it takes time to engage in these markets. So just start in, put $100 in a platform if that's not a lot of money to you, and just try it. That's what I did back in the early days. I used to give out just like $5, $10 to people, because it was so new, all of this stuff. I was like, I'll just give you $5 as a coffee, right? When you make some money, just give me the 5 back. And I used to do that was my onboarding technique. And I had to go around one by one to people, just to say, like, just get involved. Like, once you're involved, you'll start to see, and you'll start to be curious. So if you do nothing, you're basically just a guaranteed lose. So you got to do something to try and learn. And that doesn't mean, people are so binary. It's like, oh, well, if I'm not going to put all of it in, what's the point? Well, just put something, just try something, right? You need to get a referral program soon, and then you can get even more people trying. Yeah, I know it's going to come, but like, let's get it in.
Yeah, absolutely. I mean, so many people are frightened of, oh, well, I missed it. I didn't get it in 2013, so I've missed it. I didn't get out in 2017, so I've missed it. I mean, you haven't missed it. You've never missed it, because,
you haven't missed anything.
When it comes to kind of building your own more secure financial future, you're never missing it. Just have obviously the most important thing, if you're not dealing in kind of more stable assets, is to be very careful, and to make sure that if you are having a punt on a speculative asset, you can afford to lose that money. That's obviously an important factor. But I mean, if you're young and you've got a little bit of money to play with, and you want to start experimenting, not financial advice, that's entirely up to you, but there's no boat has been missed, is the point here, I think.
There's definitely no boats missed. Like, every day I miss another boat, so it's just like, get onto the next yacht or whatever. Do you know what I mean? It's just I'm constantly missing stuff all the time. So you just can't, you need a group and a community to like engage in this thing, as like, it's the revolution of the retailer now, being able to collaborate with all their friends and basically outpace a lot of these hedge funds and different things is here. So if you have
that's so exciting. Yeah,
it's really cool.
It's
We're
great
doing
to see.
it. Like, I'm outperform all my financial friends, like the win finance. I'm just like, what are you doing? Like, get over here. Oh no, it's like, so like, people who are just gonna miss all the boats, then they'll get on the cruise liner at the end.
Like all the old
you gotta
geezers.
It's they're coming.
No offense to old geezers, we love old geezers.
Yeah, that's it. So it's crazy. Just get involved, make a start, and then you'll, even just in your education, and there's so many resources like available. Even your channel's got loads of stuff, and your platform and all different things. So I think it's really exciting.
Yeah, it's a really exciting time. I agree. And yes, on that note, we do have lots of educational resources on our blog. So you can go to yield.app/blog and you'll find lots of how-to guides, everything from, what is a stable coin, what is DeFi, what is Ethereum, how to hold, why holding Ethereum is a good idea. We've got an entire range of topics that you can go to. You can obviously also go to Yield Labs. So Kevin gave out some of those handles, but Kevin, again, where can our viewers find you?
Yeah, so at Yield Labs on Twitter, if you go to that one, DM, or just scroll through and you'll see the Telegram groups and the links there. YouTube channel we've got there. Mine's at crypto_flipping. I don't flip any crypto anymore, but I keep that name because I used to be a day trader and I thought that was the way, and I just think it's a reminder like you were doing it wrong. So that's kind of my handle on Twitter, so you can follow me there. But yeah, follow our community because we have dedicated social media people who are like really pushing out tons of content, and come and join the Telegram because you'll really get a good benefit from that. It's a very, very high quality group.
Yeah, get in on the ground. And you can find us on social.
Guys in there. Some of your guys in there, yeah, and different people. So it's really cool.
Yeah, it's a great place. Check it out, guys. And you can find us on social media at Yield App across your social media platform of choice, except TikTok. We're yet to go there, but we're trying to convince Tim to start doing videos. I'm sure he will be up for it. He just needs an extra poke. So send a message in the Telegram channel encouraging that. Thank you, everybody, for coming along today. This has been recorded and we will share it with the community. It won't go public on our YouTube channel because we want to make sure that we keep this kind of content only for the Yield App community. So we will email it to you and we'll be sharing it probably in our Telegram and Discord groups as well. Thank you again. And I have been Rebecca Jones, Head of Communications at Yield App. We've been pleased, pleasured, overjoyed to have Kevin Bradford, founder of Yield Labs, with us. And we will see you next time.
Bye-bye.
Bye, everyone.